In forex trading, a candlestick chart is a visual representation of an asset. Welcome, guys. Welcome to today's YouTube video. Thank you for subscribing. Thank you for engaging. If you're new to the channel, please smash the subscribe button and let's learn. In trading, a candlestick chart is a visual representation of an asset's price movement over a specific period, e.g., daily, hourly, etc. Each candlestick displays the open, high, low and close prices for that period. This information is used by traders to analyze price trends and patterns. There are two types of candlesticks in the market. They are bullish candlesticks and bearish candlesticks, and they are represented with colors, irrespective of the color you choose to, but they are usually represented in two colors. A candlestick has two main components, which is the candle body and the candle wick. These two components are integral parts of our overall analysis as they both carry weighty meaning. If you're new to the channel, please smash the subscribe button. In a candlestick, there are the candle body and the candle wick. The candle body represents the thicker part of the candle, while these lines at both ends are called candle wick. For a bullish candlestick, the candle body opens at the bottom because this is where price starts. We understand that bullish means a push up, while bearish means a push down. For a bullish candle, everything started from the bottom and ends at the top, continuously creating a trend to the up. For a bullish candlestick, it opens at the bottom while it closes at the top. This is called a bullish candlestick, irrespective of the color you choose to make yours. In this video, I choose the color green. Then for its bearish counterpart, it opens at the top and closes at the bottom. We understand that bearish means a push down of price, and everything coming down starts from the top. A bearish candle opens at the top and starts creating a push down. This means the candle eventually closes at the bottom. There are important candlestick formation. I know there are videos everywhere that talks about candlesticks, different types of candlesticks, and there are lots of traders that pay a lot of keen attention to these things. But for my strategy and for my approach to the market, I pay attention to just these four candlestick formation. They are engulfing, pin bar, indecision or doji, or mabuzu. Now let's engage. An engulfing candlestick pattern in technical analysis indicates a potential trend reversal. It is formed by two consecutive candlesticks where the second one completely covers the body of the first, signaling a shift in market sentiment. The pattern can be bullish or bearish depending on the trend and the colors of the candlestick. We understand that an engulfing candlestick encompasses two candlesticks where one completely covers. The word cover can be interchanged for engulf, the body of the first candle, signaling a shift in market sentiment. The pattern can be bullish or bearish depending on the trend and the colors of the candlestick. And here is two examples. This is a bullish engulfing candle. We can see that this was a bearish candle and the bullish candle completely overshadows the bearish from the top to the bottom. It completely covers it. This push up on the bullish side means a lot of buyers enter the market at this point, creating this massive rally to the top. Now, this can signal a trend reversal when analyzing your chart because the strength of this bullish candle emphasizes the strength and the activeness of buyers in the market. Then, for a bearish engulfing, opposite. This means, as we can see, the bearish candlestick completely engulfs the bullish. This can also trigger a trend reversal because it means a lot of sellers enter the market at this particular time. Number 2 on the list, we have the pin bar. A pin bar candlestick pattern, also known as Pinocchio bar, is a single candlestick formation that signals a potential price reversal. It is characterized by a small body and a long wick, shadowing extend in one direction. This pattern suggests a battle between buyers and sellers, where one group briefly takes control but ultimately fails to sustain it, leading to a rejection of price. And we understand this looking at pictures. This is a bullish pin bar and this is a bearish pin bar. From what we understand, we know that a bullish candlestick starts opening at the bottom and closes at the top. Then for a bearish candlesticks, it opens at the bottom and closes at the top. From our analysis, a pin bar candlestick, also known as a Pinocchio bar, is a single candlestick formation that signals a potential price reversal. It is characterized by a small body and long wick extending in one direction. This pattern suggests a battle between buyers and sellers, where one group briefly takes control but ultimately fails to sustain it, leading to a rejection of price. We can see clearly that when the bullish pattern opened, the bullish candlestick opened at this point, you notice it was pushing up. When it got to this point, it came down a bit, creating this long wick. This long wick pushing to the downside signaled that a lot of bearish momentum entered the market. Bearish momentum entered the market, but it was unable to sustain that force. At the end of the day, buyers eventually took control by pushing the market back to this point. Now, this signaled that although there were sellers in the market at that time, but buyers were able to regain momentum. Then for a bearish pin bar, same thing. We understand that price opened at this point and came down. But this long wick signaled that a lot of push up between the buyers and the seller, a lot of tussle. Buyers at some point pushed the market to this point, but they were unable to sustain it. Then bearish pressure came. This overall bearish pressure is what this wick signifies. Now, this kind of candlestick formation is called pin bar or Pinocchio. Then we have indecision and doji. A doji is a candlestick pattern used in technical analysis that signifies market indecision. It is characterized by an open and closed price that are virtually the same, resulting in a very short body or no body at all. This indicates a strong struggle between buyers and sellers, with neither side gaining a decisive advantage. We understand that for a bearish candlesticks, it opened at this point and closed here. Now, an indecision candlestick usually have little to no body, in some cases no body at all, just a tiny dot. Now you see that when price started from this point, bullish, it pushed it down here, right? Then sellers came in and also dragged the price to this point. Because of the tussle between buyers and sellers, the candlestick was indecisive, hence the name indecision, creating a gap both at the top and the bottom, leaving just small leeway for the candlestick. This kind of tussle, this kind of tug of war creates an indecision, meaning neither buyers or sellers were able to act effectively. For a bearish indecision, we understand that a bearish candlestick opens at the top and closes at the bottom. Now notice when it opened at this point, it dried to this point, to the bottom. Then bullish sentiment came in and pushed price up again. The tussle between buyers and sellers created this indecision. It is very important to note that when we come across indecision candles, we look at the overall trend, because just this candle cannot give us a decision to trade with. Hence the name indecision candle or doji. Then we have a Marabuzu candlestick. If you're new, please subscribe and turn on your notification for future videos. A Marabuzu candlestick is a Japanese candlestick pattern representing a strong single session move with no or very short wick or shadows. Wicks are also called shadows. The word Marabuzu translates to bad head or shaved head in Japanese, reflecting the candlestick's lack of upper and lower shadow. This indicates that a session opened and closed near the day's high and low, respectively signifying a dominant trend of buyers or sellers. These can be seen as a Marabuzu. These can also be seen as a Marabuzu. These can be seen as a bearish Marabuzu, and these can be seen as a bearish Marabuzu. Now we understand that a Marabuzu is a push up, a massive candle with either wicks at the top or the bottom. This sentiment signifies that a lot of buy pressure was active on the bullish Marabuzu, creating no rejection at all from sellers. You notice that price opened and went straight, creating a massive candlestick body. This signifies that buyers are active in the market because there were no contention from sellers with them. And this can also be a Marabuzu. You'll notice that price opened at this point and was pushing to the top, pushed to this very point without any form of resistance. Same for the bullish sentiment. We understand that price came from this point and pushed massively to the bottom. That push was not hindered by buyers because no resistance at all occurred. Same for this Marabuzu. We have a recap of all four major candlesticks, and that will be it for today. Thank you guys for engaging. If you're new, smash the subscribe button, turn on notification, and for complete Forex newbies, there are videos below this channel that would really open you up to the Forex space. They are beginner friendly and are easy to assimilate. This is a candlestick. We understand that the candlestick has two parts, the candle body and the candle wick. For a bearish candlestick, it opens at the bottom and closes at the top. For a bullish candlestick, we know that price opens at the bottom and closes at the top. Then for a bearish candlestick, we notice that price opens at the top and closes at the bottom. These are four important candlestick formation that I take note of, and for my strategy, these are very important. We have engulfing, pimba, indecision, or Marabuzu. The engulfing candlestick pattern is a technical analysis that indicates a potential trend reversal. It is formed by two consecutive candlesticks where the second one completely covers or engulfs the body of the first, signaling a shift in market sentiment. This pattern can be bullish or bearish depending on the trend and the colors of the candlestick. And this is a visual representation of what we were talking about. We notice that these are candlesticks, two candlesticks consecutively. Now the bullish candlestick completely covers the body of the bearish candlesticks. This push signals that a lot of buy momentum entered the market, signaling this complete engulfing of the previous. This can signal a change in momentum, so as traders we pay attention to this. For a bearish engulfing, the opposite. We understand that price was bullish at some point, but an overall bearish momentum came in that kicked off price, thereby closing in on the bullish candlestick. This overall close-up can signal a change in momentum. A pinback candlestick pattern, also known as Pinocchio bar, is a single candlestick formation that signals a potential price reversal. It is characterized by a small body and a long wick or shadow extending in one direction. This pattern suggests a battle between buyers and sellers, where one group briefly takes control but ultimately fails to sustain it, leading to a rejection of price. Now, this is a bullish pin bar, this is a bearish pin bar. We notice that it has small body and a longer wick. This bullish candlestick opens at the bottom from our understanding and closes at the top. This drive up, leaving a little body and a large wick, signal that there were contention between buyers and sellers. At some point, there was a bullish pressure to this point, leaving behind this long wick. But overall, buyers came in and regained momentum, thereby pushing the market to the top. This is the bearish counterpart. An indecision or doji candlestick. A doji is a candlestick pattern used in technical analysis that signifies market indecision. It's characterized by an open and closed price that are virtually the same, resulting in a very short body or no body at all. This indicates a struggle between buyers and sellers, with neither side gaining a decisive advantage. Bullish indecision. Why? This is a bearish indecision. We understand from our analysis that it has very little body and a long candle wick. This means that at some point buyers pushed the market to this point and later on sellers pushed it to this point, leaving a very little leeway between candlesticks. This means that at this point the market is indecisive. If you should see this on a daily candlestick or on a 4-hour candlestick, it means for a whole 4 hours, buyers and sellers were indecisive, with neither party gaining accurate momentum. The Mabuzu candlestick is a Japanese candlestick pattern representing a strong single session move with no or very short wicks or shadows. The word Mabuzu translates to barred head or shaped head in Japanese, reflecting the candlestick's lack of upper and lower shadows. This indicates that the session opened and closed near the day's high and low, respectively signifying a dominant trend of buyers or sellers. This is a bullish Marabuzu, this is a bearish Marabuzu. From what we can see, there was a push up to the upside and there was no contention from sellers. This signals that at this point, buyers were very active in the market. Same for this bearish Marabuzu. Thank you guys for watching. You can simply go back to the beginning of the video and watch it to get more accuracy as to what candlestick represents in the market. That'll be all for today, guys. Smash the subscribe button and thank you.